A few companies are set to report earnings tomorrow, and I quickly wanted you to be aware of what the market expects them to report. I really hope that you learned something new, and if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. Let's go ahead and jump right into it. As many of you guys know, tomorrow Nbis is set to report earnings. This is a stock that a lot of people are watching because of its performance for 2025. If you look, this thing went from lows of $21 per share to highs of $141. In a very short period of time, it became one of the highest and best performing growth stocks for 2025 with nearly a 600% return. Now it has recently kind of pulled on back. It's trading at highs of 110. 444% is where we are at. It's at a critical point. Are we going to find support and go back to retest previous highs, or are we going to break support and actively sell off? For those that do not know, again, tomorrow's market expectation for Nbis is negative 46.56 EPS and revenue to be at 12.84 billion. I want to remind you that this stock has a market cap, if I'm not mistaken, of $27 billion. But supposedly, if you actually look at the actual breakdown, it's a company that produces $243 million in revenue. So it's valued at $27 billion, but it doesn't even clear $1 billion of net profit. Okay, again, but it has amazing growth. In my opinion, like just very simply, this is a momentum-based stock. During these irrational markets like this can support irrational valuations. We know a little too much about that this year, right? With Oklo, with TEM, with Nbis, these are very popular stocks based off of speculation, not based off of fundamentals. So if we do enter a recession, not saying that we're going to, or if we do enter a bear market, these stocks are always going to be the ones that crash the hardest. But if you believe that these irrational markets will continue to stay irrational, then that type of market condition supports, longer, higher highs and higher lows. So I'm not here to convince you that you shouldn't buy it and hold it. I don't think it's a safe play. I don't think it's a good idea, but that also doesn't mean that in the short term, it can't continue to pump. I think it's, proof is in the pudding that it's up nearly 500% in just the past few months. And that's because there's a lot of momentum. If you look at the actual breakdown, if you look at the actual analysis of the specific stock, some people are rating it as a strong buy just based off of specific price action. And if that's the way that you trade, because of course this thing has had an amazing performance, I can see it if it meets your criteria, all power to you. My only reminder is that, hey, it is up 500%. So if all of a sudden markets begin to retrace, do not be surprised if the rug gets pulled on this and this thing experiences a 50 to 90% retracement as it has in the past before. So again, we'll make sure that we follow up with this one. Tomorrow, although it does report earnings before the market opens, it's not my biggest focus. There's BYND, which is, we've said it before, a bullshit company that was being pumped and dumped just a few weeks ago. It's right back at $1 per share, but everyone said it was going to go to $100 per share for some apparent reason. Yet it's a business that loses hundreds of millions of dollars every single year. And then there's Oklo. Oklo doesn't actually expect to make any money until 2028 or 2029, but it does burn through about $500 million a year. And it also has insane valuation. So those are the ones that I'm most excited for, to see what they actually end up reporting, so people can begin to actually see that, wow, these companies truly are insanely overvalued. But again, markets are irrational. Even today, we saw insane pushes with the overall market. One stock that I ended up trading today, I wanted to show you guys, I talked about it in my earlier video today. It was ELF. It's set up for an overbought reversal. I saw signs of a resistance. Fortunately, it didn't end up making new highs. It kind of just came to retest the same previous high of right around $81 per share, but I lost $142. Very small loss in comparison to, my green days or my normal red days. This was pretty much a break-even day for me. But again, like I've said today, if you're part of my LPP team, you saw how hesitant I was to take a trade because of how bullish the market was, right? It was incredibly bullish with higher highs and higher lows. It didn't really support the idea of shorting anything when direction and price action are not in your favor. At one point, I was up about $1,000, but then it found its support and then it quickly began to recover and it went back to that kind of break even to slightly in the red. So not a big deal. But again, I just wanted to make sure that I hold myself accountable and recap, like I've said, both my green days and my red days. And that's what my LPP team loves about our trades. Other than that, NASDAQ market is back at 624. I'm sure some of you guys already saw the news, but I shared it on my Instagram story. If you guys don't follow me on Instagram, it's the third link in the description down below. Trump or the White House is suggesting the idea of a 15-year car loan. So now we're introducing a 15-year car loan just moments after you're offering a $2,000 stimulus check that's paid by tariffs. And then the day before that, you announced a 50-year car loan. a 50-year mortgage. The part that I don't understand, and again, it's just food for thought. Trump continues to say how great the American people are doing, how great our economy is doing. Why would we need 15-year car loans? Why would we need 50-year mortgages? And why would we need a stimulus check if we didn't need to be stimulated? Just food for thought, right? Our economy is weak, inflation is beginning to rise, and the job and labor market is incredibly weak. All the red flags are there. And now we have our government coming in and offering these insane loans because that is their only option to make things supposedly more affordable. And if you don't think or know anything about the kind of like interest schedule for mortgages or for car payments, a lot of them are front loaded, which means that if anyone were to actually take them out, they end up paying twice, if not almost 3 times as much as if they would have just taken out a normal mortgage or a normal car loan. So please, again, it's not a bad idea to have your own opinion. Trump is going to come out with ideas, or the Trump administration is going to share ideas, just like any administration. And not all ideas are ones you have to agree with. That doesn't mean that you hate the guy. It just means like, hey, like, why is this happening right now? It kind of like almost signals these red flags of maybe there is some uncertainty. Maybe we do need to stimulate the economy. And if that's the case, then we need to be very careful if you are leveraged at these elevated levels, that if we do begin to experience a downturn, you don't put yourself in a position you simply cannot tolerate. So again, like I've said, if you want to go long, if you want to buy and invest in super speculative companies right now, be my guest. You're an adult. You can do whatever it is that you want. Just please don't use leverage. Just do it with the cash that you have. So if you happen to take a loss, it's at least with the money you actually have and not on borrowed funds. Just my 2 cents. I wish you guys nothing but the best. Hope that earned your thumbs up. Please consider subscribing. And for those that want to, you can watch me trade live starting tomorrow. And that's the second link in the description down below. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.